All right. What's up, tycoons? Super excited for today's video. We are going to be taking a look at Warner Brothers, okay? Ticker symbol WBD. And, I'm showing you guys this one because it is down significantly, okay? It's currently at $20. All-time highs was $78. And, we are approaching our weekly demand zone, okay? So what we're looking at currently is the weekly chart. Each candlestick represents a week. And this green box right here is going to be our demand zone, okay? So this means on a large time frame scale, when we drop to these prices, we see a demand imbalance in the stock, okay? And this causes the price to rise, okay? Because that's all the stock market is supply and demand. And you have to know the levels or the zones where demand could step in and there could create a demand imbalance, and also where supply could step in and there could be a supply imbalance where you see a sell-off, okay? So we're going to look at that first, the weekly chart, okay? So this is back in 2017, 2018 year range when we hit our lows of 15.99, okay? And we can look here around the COVID crash, right? It dipped back down into this demand zone and consolidated, traded a little bit sideways before taking off on this mega insane rally. All right. So now that we know that we are in our weekly demand zone and we can see where I got it from, okay? Because once we entered into these areas, there was a demand imbalance, and that's when the price started to rise, okay, over the past few years, all right, nearly close to 10 years on this stock. Right now, we're going to zoom in a little bit more to the daily chart now, okay? And I'm going to show you a couple things on the daily chart, and we'll go ahead and jump right into that. The first one is going to be right up here at the top, okay? This little thing right here, this box is what's known as a gap, okay? These daily gaps tend to fill about 90 to 95% of the time in the stock market. It's just a matter of when, not so much a matter of if, right? So you can lose a lot of money trying to play the gap. Let's say originally when it gapped down these 2 days, you're like, oh man, well, from here to here on the gap, that's a 20% return. Let me buy in now. No, right? Market conditions have to be met for these gaps to be filled, right? So, a gap up, like we have a gap all the way up to 74 on this stock, that is going to be filled when the stock is in a bullish market cycle, when there is its next euphoria market cycle, right? The stock has been down a lot, okay? And if we go back here to the daily chart, okay, you can see here just in the past year, the highs were 39.7, all right? Um, so, it's still in a downtrend. Okay. As you can see here, highs of 39.7. We just hit lows of $20.37. All right. Now we have earnings coming up. It's going to be right here on the 26th. Okay. So it's coming up in about 2 days at the time of this recording. And you guys have an understanding of what this green box is and where I got it from. Okay. Yes, it is a big range. All right. If we look here, it's if you buy at the top of the demand zone, and we fall all the way to the bottom, you could still lose 27%. Okay, so just because we're in the demand zone does not mean it's a buy now. What it does mean is that, hey, maybe it's time to start paying attention, and we want to see if that previous demand balance that we saw in the past 6 7 8 years on this stock, are we going to see a demand imbalance again in these areas because we haven't tested these levels since then, right? We can look here and you can see that as soon as we do dip into demand, okay, like this day right here, we wicked down into demand and we rallied. All right. So we rallied, and then now we're coming up into our red box. This is known as our supply zone. And this is an area where there's an imbalance of sell orders in the market. And this is going to create a sell-off. Okay. So we can look here. It's been respected in these areas. All right. These are the original areas where we come into it and it tried to find some demand, but there's a supply imbalance and we drop. So what this means is that, when we come up to here, it's going to head back down to your demand zone to a level where it finds demand, unless we see buyers step in and create a demand imbalance versus a supply imbalance. All right. But for now, this is still an area where we're seeing a supply imbalance. Boom, we come up, we hit it, we sell back off. All right. We try to recover, we try to hit it, we sell back off. Okay. Until we bounce into demand, and then that demand carries us back into our supply zone, where again, we fall back down, we come into supply, okay, and we fall back down again until we come back into demand. All right. So there's a lot of noise going on in the chart. And that's kind of what I want you guys to recognize. All right. Is, Once we hit here, it's a lot of noise, but we head all the way back down. Okay. And then we come back up, we hit it again, and it's a lot of noise, a lot of choppiness, but eventually we drop back down into demand. All right. So why am I showing you this? Well, like I said, we've got earnings coming up. Okay. And then also, this could be a good entry position for some longs. All right. If you want to go long and you're looking to get some long-term positions on Warner Brothers, of course, do some research, dive into the company a little bit further and do, some of your own research. Right. But the returns are going to be pretty significant. Okay. Let's just say, even from right here up into the supply zone to the bottom of our supply zone is a 43% return. To the top of our supply zone is a 55% return. All right. Now, let's say it drops even further and we go down to 17.5. From 17.5 up into your supply imbalance is 66% return and an 80% return. Now, these aren't even to all-time highs of 79. These are just in, to trade in between back to our, our supply and balance zone. All right. Now, if the stock continues to drop further and further, what we're going to have to do is we're going to have to figure out, our next supply zone, right? We may have to draw a supply zone somewhere down here, if the stock continues falling, because we want to know where is it going to sell off at, right? So we know in between these two levels, right, these are our sell-off points, and the black zone is going to be just noise, right? It's going to be a lot of noise in between there, a lot of up and down. But overall, once we hit supply, it's going to come back down into demand. And once we hit demand, as you see, it goes back into supply. All right. So these are the main levels that you want to be watching, both of these. And I would definitely keep an eye on it. Okay. It's been in a very big downtrend. Volume has picked up significantly. If we look here on the volume chart in the past few days, since when is this? I don't know, like the beginning of April, really, the volume has picked up massively. Okay. Now we did see a huge sell-off right before earnings. So, maybe that's not the best sign, right? Maybe people know something about earnings that we don't, that it could be bad, or, people are just selling their stocks because they don't want to hold through earnings, right? That's something that a lot of people do. But it's definitely on my radar. It's so cheap right now. And if we look, we have something known as bullish divergence building. Okay. That's when we make a low and a higher low on the RSI. Okay. So if you can see this, I'll make it a little bit bigger for you guys. It's an uptrend. Okay. This arrow is going up. If we look at this same point on the stock and draw it to where we're at right now, that's clearly a downtrend. Okay. And I'll make this one bigger just so you guys can see. That is what's known as bullish divergence. Okay. And the reason being is because there's a divergence between the RSI indicator, all right, and the stock price. All right. So we're going lower, creating lower lows on the RSI, but we're making higher lows on the, or we're making lower lows on the stock price, and we're making higher lows on the stock price. This is a lot of times used as an indicator that we may see bullish activity in the future, right? It's not a guarantee. It's not meant every time you see bullish divergence to go ahead and buy and go all in because you're going to have a bullish pop. But what it does let you know is that, okay, hey, well, these are some bounce zones where we could see a bounce on the RSI and a bounce on the stock for some short-term trade catalysts. Okay, so thank you guys for watching. If you need a tutorial, okay, maybe on divergence, bullish divergence, bearish divergence, things like that, I have a video right here. You guys can go ahead and watch that one. And it's a nice 5 to 10 minute breakthrough or breakdown, a walkthrough. Very simple, easy to learn from.